take a look at investment strategy and find out perhaps where Rob Shears, Principal Advisor and Director at Valor Private Wealth, is looking for opportunities. Joining us now. Rob, good to see you.
Thank you very much.
All right, how are you looking at the environment at the moment for investing? Because, obviously, particularly stateside, seeing a lot of frothiness there. It was interesting, of course, we got that market reaction given that very disappointing payrolls number. So, and we would just have a couple of guests there talking about, well, we're still seeing momentum into May. Of course, traditionally, May has been a time of a bit of a pullback. So how are you looking at it at the moment?
Short term, the dartboard wins, and the astrologer and the school kid in the tipping competition. So, look, short term predictions I don't think usually help, but yeah, it's usually weaker in May. What we're seeing is sort of two different directions in markets. A lot of this really speculative, loss-making, need people to keep on shoveling money to these companies to keep the lights on. Those sort of companies have been coming off quite a bit since February, but the larger, big, boring, safe tech companies they're printing money like we've never seen before. The profits these companies are producing are this has never happened before. It's amazing.
And so that's going to be the theme that sticks around when it comes to big tech, you think? I mean, look, we've got rising input costs, supply chain issues. Are they going to see any of that filter through?
Azure for Microsoft is growing at 50% per annum, and I don't think there's so many things in economics which slows that down. It'll definitely slow down over time, but it's becoming a larger part of Microsoft, which is actually accelerating Microsoft. The same thing's happening with Alphabet, with YouTube and their cloud business. These companies are growing faster than they have grown for the last 10 years because the cloud segments are growing faster and a bigger component to these businesses.
All right, let's talk about then that. So you say it's all about the cloud at this point, although you're even seeing those non-cloud businesses obviously outperforming too, aren't you?
Yeah, look, I think that the cloud is a secular trend which I think has a very long platform for growth. Andy Jassy, the new CEO of Amazon, said that less than 5% of total IT spend is in the cloud, is on the cloud. So there's a long platform for growth there. But the non-cloud side of things, there's been quite a bit of brought forward earnings. There's a number of companies over-earning, and that came out with a couple of results recently as well, and they've come back quite a bit. So there's sort of two sides of tech. There's the infrastructure side of tech, which is the cloud infrastructure side of tech, and there's the businesses which were e-commerce overselling during the pandemic, and they've come back a bit. So I think there's two sort of areas there which are sort of trending in different directions.
So can we nail you down on some stocks that you're thinking, at this point, still a lot of potential?
Well, I still think that Microsoft, Amazon, and Google have got a long platform for growth, and so those are the three. I believe it's over 95% of cloud infrastructure. Those three companies are the cloud, so it's likely that there's not going to be anyone else coming into that space which has the same platform. And platforms are a sort of a flywheel. Once you get all the apps and the developers of those apps, trying to get someone to start a new platform is very, very difficult. So they've got a long platform for growth. There's a couple of interesting ones which I'm still learning about, which is Snowflake, which is trying to integrate those different platforms together. That has a lot of potential, but we're not investing in that at the moment. Berkshire Hathaway is, but we're not in there.
Well, let's talk about Berkshire Hathaway then. They had their annual meeting last week. They announced the new CEO that's going to be joining the board. What were your takeouts?
So Lawrence Cunningham wrote an excellent book in 2014, actually laying out categorically that Greg Abel will be the CEO once Buffett departs. And so I've known for 7 years now that that's the most likely scenario, and sort of it's almost guaranteed that was going to happen. He's already been put in charge of. There's two sides of Berkshire now. There's the non-insurance businesses, and then there's insurance, which is run by Ajit Jain. He's already in charge of $170 billion of revenues. He's the CEO of that already, so it's no surprise.
All right. Meanwhile, they're continuing with the buyback, despite that price rising. So what's the strategy there?
Well, it shows that Warren thinks that the stock's still not overvalued, or still undervalued. He has categorically said, I won't buy back shares unless he believes it's significantly below intrinsic value. So he still thinks that Berkshire is undervalued in an what looks like an expensive market.
Do you agree?
I agree. So and to put that in context, Warren doesn't just buy back stock. There's a lot of companies that buy back stock just because that makes their share price and the options go up, which is usually detrimental to the business. I'd say that if it's not 80%, it might be even higher. Of buybacks are a net negative to the company over the long term. Warren has only bought back stock 3 periods in 57 years, 3 times in 57 years. And so for him to be buying back stock it says a lot. They always say, look at what someone does rather than what they say, and so I think that says a lot about what he thinks of the stock price.
What about other companies in the space? Markel is another one that you've got in your note that you like. Tell us a bit more about this one.
So it's called the mini Berkshire. It's not exactly that, but it's an insurance company which reinvests all of its profits back into operating businesses. And as much as everyone focuses on the insurance side of Markel, their Markel Ventures, their operating arm, is probably where we're more interested in the business over the long term. That's high margin, much smaller business than Berkshire, but it's growing rapidly. And we actually expect that to be a much larger part of the business in 10 years' time than currently. It's currently approaching half the size of the business, but that's wildly profitable and got a lot of growth, which is exciting.
Okay, well, Rob, so let's come back to our shores then. In the same sector, are you seeing any opportunity here for some companies, particularly financial services, fundies, and so on? So,
financial services businesses have been difficult over the last couple of years because of regulatory changes. So, AMP has tied their own shoelaces together and tripped over themselves a number of times. A lot of other companies in that sector have done the same thing. Fiducian has sort of come through this regulatory headwind period relatively unscathed. It's a very, very well-run business. Indy Singh, who's the CEO, owns over a third of the company, and he's got skin in the game, and he's not going to do anything silly. Their model is it's a triple click. So they own the financial planning business, they own the platform, and they own the fund management business. But they integrate it well, and they've got a fantastic business there. So that's that system, and then they keep on buying more smaller practices and join them in the mix to grow the business. So it's, excellent capital allocation there. It's a very, very profitable business.
Rob, thanks so much for joining us this
Thank you.
morning from Valor Wealth. Always great to see you.
Thank you.
Thanks, Rob. All right, let's